Hello, folks. Welcome to this month's Forex commentary. Of course, this is Settle Black, and happy new month to everyone. And this is a new month. I think the third day of March, and it's gonna be a great month, really. So first off, I want to say something. Um, I was in a Forex Unlocked program, and you know, I had a swell time on the chart. And really, I got new subscribers count on my YouTube channel, and I thought about it over the weekend, and I made mention of it last year on my Twitter account, talking about how I want to get to 1,000 subscribers on YouTube, and that would facilitate a new mentorship program, a new mentorship playlist on my YouTube channel. Now, seeing the influx of new and developing students, it really pushed me to think about pushing the plan backwards instead of making it 1,000 subscribers. I'm thinking about starting a new mentorship playlist on my YouTube channel. Now, the primary aim of the mentorship is for anyone who wants to study ICT concepts and can go through a catalog of about maybe 200 videos. I mean, that's crazy. Okay, I'm gonna do a mentorship playlist where I start from defining the high time from institutional order flow, really, because I think when I really talk about the high time from institutional order flow, not everyone understands that you can actually define long-term trend in the market, aka the high time from institutional order flow, without looking at candlesticks, really. Okay, you do not need candlesticks. Okay, you just look at data, you look at reports, and then you can define the high time from institutional order flow. Now, when you now define it, you can now go to chart and interpret basically the data into the candlesticks. Okay, because candlesticks, they will express what you see in the data. So your job then is to now interpret candlesticks. Now, that being said, I know a lot of folks, and that's the whole point of me coming online. That's the whole point of me teaching online, is because I want people to ask questions. Okay, I understand that a lot of people will be thinking, oh, I'm not in a paid program. I'm probably not in his paid program in quotes, so I don't think I'm licensed to ask questions. Well, if I do not want to answer your questions, in fact, I'm more than happy to respond to your questions. I would not be producing online. Okay, I would have remained wherever I was before I came to the internet. And I need you to always ask questions. If you feel uncertain in any way, ask questions. I would respond to your questions, basically. And I want the YouTube comments to really be about those questions. Okay, if you have any of those doubts, you just come up and just say, hi, you said this and that, could you please explain? I'll be happy to explain, really. And it's only for the purpose of fostering growth in the community, and that's just about it, really. So I know I'm speaking, and I am not hearing any response, so I want to see 30 likes minimum on this video, and that pays for the start of the mentorship series. Now, mind you, we're trying to get to 1,000 subscribers on my YouTube channel, and the only way I'm going to get there, aside from me running my marketing online and stuff, okay, is for every single person showing the appreciation by recommending my channel, commenting, engaging this channel, so that the YouTube algorithm can recommend this channel to a new person. Somebody out there is just feeling lost and just need headway on Forex. And just about that, I'm starting a mentorship playlist on my YouTube channel, and it's going to be long videos because I'm going to talk a lot. I'm going to say a whole lot of things, and if you have short attention span, then first off, I don't think you're willing to learn Forex. Because if you want to learn Forex, you need to consume a lot of information, because that's how you're going to build your conviction. That's how you're going to build, you know, the school of thought through which you want to look at the market. Okay, like your market philosophy. You're going to consume lots and lots of information, right? And you, like I said, the point of this video is, sorry, the mentorship is for those folks that are interested in learning the ICT concepts, or interested in how I view the markets, and how did I get to this point of looking at markets like this, which is something anybody can do and you can replicate in no time at all. And that's the reason why I have my social media accounts, especially my Twitter account, because there are periods when I look at the market and markets are not actually meeting my expectations. But I know for a fact that, okay, I understand PD arrays, I understand the weekly profiles, I understand the daily profiles, right? And I just go to my Twitter account and just, talk about it in live markets, just give like a live market commentary on what I think is going to happen. If I see this, I expect this to happen, and the time it's going to happen, and when I am expecting to, engage the markets, right? So my YouTube channel might just be, your source of information, but I think my Twitter account too is just as important, because there are periods when markets don't validate my expectations quickly, and I do justice to that, and with the commentary too, for everyone who listened to me. Oh, this guy, you said this and that, market hasn't done that, so what's in your mind? Well, that's on my Twitter account. I was, tells you what's going on in my mind and how I intend to, approach price action. All right, I think I said a lot, and let's quickly jump into the video. I normally wouldn't do that, but I have lots of subscriber accounts, suddenly about 60 people subscribed, which is very, very beautiful. So I have to address for those folks listening, and you turn on your post notifications so that whenever my videos drop, especially the mentorship, like I said, 30 likes pays for the mentorship, you can be notified of the videos, and you comment, ask questions, on YouTube and stuff. So back to the video. This is the commentary. This is dollar index, and this is the monthly time frame, DXY, happening month again. And I'd like to begin with talking about the high time from institutional order flow. DXY is bearish. Okay, DXY is bearish, and we have February validating that bearishness. Even if we didn't get an ideal bearish close, but we understand that the previous 2 months in Forex has been in consolidation. So this is obviously showing you that markets has been in consolidation. Okay, but better still, we still had a bearish close. Not just that, we had a swing high from. Now, if you're an old listener of mine, you understand that whenever I see the markets create a swing high such as this, I'm expecting this candle to trade below this candle's low. Okay, so basically the drawn liquidity here would be the previous monthly low on the monthly time frame. Okay, the drawn liquidity on the monthly chart is the previous monthly low. Now, if you look if you look at price action, whenever markets have, the swing low from here, you can see the markets tend to trade into the previous monthly high. You see swing low here, markets trading to this high, and you can see we have, instances where the market creates a swing low here, and the expectation was for prices to trade above this candle's high. But you can see markets were indecisive here. So it now makes sense that when prices traded into sell side liquidity here, it served as a precursor for markets to run higher. I'm not even talking about the high time from institutional order flow at this point, because it was bullish. Okay, but you can see if candles fail, okay, you can see we have an indecisive candle here. And most times when I see indecisive candle, what do I call indecisive candle? A candle that stays in between the range of the previous candle's range. It could be the previous day's range, the previous weekly range, the previous monthly range. Okay, when you see a market that's indecisive like this, and market takes one portion, okay, something like a pattern, trust me, it's not 100% because the periods it wouldn't work, and that's why you need to understand narrative. You need to understand what the higher time from institutional order flow is. Okay, so when you see an indecisive candle and markets trade into the previous candle's low, well, you can begin looking for setups after blending key levels for markets to return into, the previous candle's high. It's just like that. Okay, you have an indecisive candle, for example, the market takes out buy side first. You begin looking for setups that can return back into sell side. So if we run sell side first, okay, why are you looking for markets to return into buy side? It's just as simple as that. Okay, and trust me, I've incorporated into my day trading models, and sometimes it's just so beautiful when you see it. Anyways, so on the monthly time frame, the expectation this month for March is for March to be bearish, and when we look at the seasonal tendencies, because seasonal tendencies is just one of those things we look at sometimes, especially when there is narrative and seasonal tendencies actually blends in with current price action. Okay, so if you look at seasonal tendency here, this was a seasonal tendency report I did back in 2020, so it's not something I did back in the day. So seasonal tendency just collates data basically. Okay, it shows you that the past performances of a particular asset or pair over an extended period. Now, this is not an updated seasonal tendency. It stopped at 2019. Obviously, I did this in 2020, and I haven't had to, update the seasonal tendency chart. But obviously, we have a 35-year range, a 15-year range prior to 2020. So I think to a large extent, this will still work. Okay. Now you can look at January, February, March to December here, and you'd see something in March. Okay, you can see the dollar index on the 15-year basis is bearish mid-March, and also the 35 years bearish, and we're expecting dollar index to form like a yearly kind of low or a quarterly kind of low at the end of April or beginning of May. We have a low form on dollar index. So primarily we are bearish on DXY, and the month of March and April are very, very favorable for bearish dollar index. Okay, so that's what we are looking out for. And back to the chart, we see the seasonal tendency validate bearish dollar for the month of March into April. So we're seeing that aligns with price action, saying that we are bearish on DXY, withdrawn liquidity here, and with the expectation that prices are still going to come into this fair value gap here. Okay, but first off, the drawn liquidity will be the previous monthly low. That's the first thing we want to look out for. Okay, even if we have the expectation that the markets are still going to trade here, but this is the drawn liquidity first, the previous monthly low. So we have this here, and let's have, all right, we have it there. I'm still going to take it off. I just need it here for now, and when we transpose into the weekly chart, we are going to take out all of these things because it's going to be really noisy on my weekly time frame. Okay, so yeah. All right, so still here, the dollar index, and this is the drawn liquidity here, the previous monthly low, which I'm going to take out, and this is that monthly fair value gap. Okay, I'm going to take it away here. That's below sell side here, which is what I was talking about, is the monthly fair value gap. So now that we understand that the monthly time frame is bearish, basically we want to see a bearish month, February. We're not going to look at the weekly time frame and determine if the weekly time frame is bearish, because it's the weekly time frame, the weekly chart, that is going to validate our monthly analysis, because our monthly bias is bearish But before we can go in looking for bearish price action, we need the weekly time frame to be in line with the monthly chart, basically. So now if you look at last week's price action, which actually got interesting, I was looking at it over the weekend, and you see there's this bullish order block, this last down candle prior to all of this move higher. Okay, this bullish order block. And mind you, market's been consolidation. Okay, market's been in consolidation, and we've been having back and forth for months now. Okay, and you know, this is the bullish order block on the weekly chart. And if you measure the 50% of this order block, okay, from the high to the low, the 50%, it's called the mean threshold. So why, you know, everyone talks about the order blocks, you know, talking about the low and the body of the order block. For example, if we look at this bearish order block, this is the low, this is the midpoint of the wick, and this is the body of the candle. You can also talk about the consequent encroachment of this weekly bearish order block. Just like this bullish order block, we can talk about the consequent encroachment, the midpoint, the halfway point of the bullish order block. And you can see how the candles actually respect, you know, the main threshold. Okay, I mean, last 2 weeks I saw that this candle closed bearish but read into this candle's low, and because we are under a bias for the markets to be bearish, and that's why, you know, we're aiming for the previous weekly low first last week, and the draw on liquidity was previous weekly low, and market met this objective on Monday. Now going forward, on Tuesday, I guess, I think it was Tuesday. Yeah, I think it was Tuesday. I did a live Twitter commentary and my expectation on dollar index, and which panned out, met a couple of objectives, but not all objectives, because I wanted more sell side. But then by Wednesday, looking at how price was trading on dollar index, I said that was the end of trading for me, because I knew that at that point it became low probability. I talked about how markets traded into the previous monthly low. That's what I was saying on my Twitter account, saying we could see a distribution back into the monthly range. And there are about 2 ways you can see market distribute. Either you can see a buyback of the initial shorts that was accumulated, okay, just like, you know, a rejection. I think I always talked about this, that when markets meet buy side objective, you can expect it to reject. Sometimes it's always aggressive like this, sometimes it's just very shallow, and or probably happens mid-month and market, you know, just trades, you know, the last week of the month to, you know, fill up, you know, those, you know, sell side delivery within that month. But this was the last week of February, and we had the aggressive distribution of the initial shorts that was accumulated. And this is something I'm going to talk about in, you know, in the mentorship. I'm going to talk about power of 3, and I'm going to talk about it from the monthly, the weekly, and the daily perspective. And we can even get smaller by looking at a 4-hour power of 3. Okay, it's just going to be very, very interesting. Okay, so that being said, we had an aggressive distribution of February's monthly range, and it's not really surprising because we are exactly in consolidation. So if you're in consolidation and market trades below sell side or above buy side, you can expect this aggressive return back into the range. So that being said, we saw the market aggressively return back into the range last week, and of course we had a bullish close. Okay, now look closely, we took our sell side here. So basic market structure was market had a high, a low, a lower high, a lower low here, a lower high, a lower low. Market made a lower low here and made a high high. So you can see, just looking at the weekly candlesticks, you can see market structure. Okay, you can easily see market structure looking via the lenses of candlesticks, and you can see that we have a shift in market structure. Like we have it from a bearish market structure, and we are looking bullish. And why do I think it's bullish? Well, we had a strong weekly candle close above the previous weekly high, and this is not validating the monthly bias, because if we're bearish, we want to see bearish candles on the weekly chart. Now, doesn't mean this candle this week cannot be bearish. No, that's not what I'm saying. But based off of last week data in terms of candlesticks closure, it's not validating this week as straightforward, and we're going to be getting a bearish week. Mind you, market traded into a resistance level, this old weekly fair value gap that acted as support here, close here, short-term resistance, and markets have returned into this level here. So the expectation here is ultimately we're going to see the market utilize this level for resistance into the monthly fair value gap, but first into the previous monthly low, the monthly fair value gap, and our longer term sell side objective. Okay, but looking at last week's price action, and looking at this current dealing range we're trading into, so mind you, there was a time, I think mid month in February, I had a commentary. I was talking about DXY return somewhere, and this is a rejection block. While we have a bearish order block that we are expecting the markets to trade into and go lower, but once you see a rejection block, how do you identify a rejection block? Well, if you see a swing point, a swing high, a swing low, whatever, that has long wicks, just like here, this had long wicks, not even as long as this, to be honest, but this has long wicks, but still a rejection block. Now, this has even a longer wick. All right, so we have a more price range we want to speculate on, right? So whenever I see markets, are in a dealing range, what's a dealing range? Well, dealing range runs opposing the liquidity pool on both ends. For example, we treat rejection blocks like old highs, old lows. So when markets trade into rejection block, we'll be talking about how markets are running buy side liquidity at the bodies of this candle. Okay, and if we talk about rejection blocks, for example, you can see this candle has long wicks, and if we think of it like a rejection block, we can say the markets trade into sell side liquidity resting at bodies of this candle. Okay. So I think I've been speaking for my water. So now that we have long wicks here and market trade into the bodies of this candle buy side liquidity here, and we trade into, you can see this previous weekly low here, this previous weekly low here, there's a bunch of sell side liquidity we can reference. Okay, we now have a new dealing range between this high here and this low here. Okay, how do we come about a dealing range? Well, it's a swing high and a swing low, basically. Okay, and even if we're yet to determine, because it's only when this candle closes we can now determine if this is a swing low. This is not a swing low yet. What makes a swing low? Well, a swing low, we want to see a higher low to the right of it and a higher low to the left of it. Now, which we just have a low, a higher low to the left. This candle hasn't been confirmed, so this is not a swing low here yet. I'm only looking at it from the lens of the monthly chart, because the monthly time frame actually ran sell side liquidity and we return back into the range. Okay, and it's from that lens, that's why I'm calling this a swing low, because if we check subordinate time frame, like maybe a 3-day chart, a 5-day chart, I'm sure we're going to see something there. Okay, so when you see long wicks like this and you have PD arrays overlapping here, now the expectation would be normally for markets to respond to this bearish order block and this inverse fair value gap and sell off. But because of last week's close, I'm thinking that the markets are going to trade into the rejection blocks here. Okay, so the draw on liquidity on the weekly chart appears to be what? The rejection block. But I understand that on the monthly time frame, and mind you, this is at premium 61.8%. If you measure from this high to this low, this is at premium. Okay, this is premium market. So if you recall carefully, I'm thinking the monthly time frame is bearish, but I don't think the weekly chart aligns with that monthly bias. I think the early portion of March trading is going to be bullish because we have a rejection block here, and markets are always drawn into the bodies of candles like this. And I think possibly when markets get here and we can now get a daily time frame validation for lower dollar prices, we can now see prices expand lower into our monthly objective. So right now I think there isn't a correlation between the weekly chart, except if we have a very insane bearish close this week. Preferably we trade into previous weekly high and close bearish. If we have that, then well, when we get there next week, we're going to cross. But for this week's trading, because I don't want to cast my net too far, right? I just want to stay within this week's price action. I don't want to say too much so I don't get confused myself. Okay, I need to just focus on this week. This week isn't looking bearish to me because of we had a bullish close, a very strong bullish close last week. And if we look at this fair value gap, for example, you can see we closed in the upper half of this inversion fair value gap. I mean, something that would mean bearish. I think we're going to just stay. Maybe we trade into previous week's high and we reject quickly because we're at a premium array. We're at a bearish key level, courtesy of this bearish order block. So why is the market closing through the 50%? Well, there is a price action module that explains how candle closes within a gap or inefficiency will determine the strength, the relative strength of that asset to respect that gap or not. Okay, but like I said, I'm trying to keep everything simple, not say too much into concepts, and that's the whole point of mentorship, so that once you go through with the mentorship and you're listening to the commentary, which is the real mentorship, okay, because I'm teaching you how to apply all of those tools you've learned from the mentorship playlist, and now you're looking at it in live markets and how you can use to manage expectations. I'm talking about the dollar index is bearish on the monthly chart. I'm also talking about the dollar index potentially bullish this week and drawing into this weekly rejection block. And that reminds me, when we looked at the seasonal tendency, we were looking at March. There's a strong seasonality for the dollar index to be bullish in the early portion of March. And this makes sense because while we are looking at seasonal tendency for dollar index to be bearish at the mid-month in March, we are also seeing the possibility that DXY is kind of like bullish, not kind of like bullish in the early portion of March. Okay. And that's the kind of validation we want to see when we incorporate data and we're trying to interpret candlesticks based off of our knowledge of the high time institutional order flow. So we are looking at, personally, I'm looking at upside on DXY this week into this rejection block, and when markets get here, I want to wait for a validation on the daily chart before I can assume a continuation lower, because when markets get into a premium, mind you, we've been consolidating and we have a monthly fair value gap here, and markets has literally been crouching, that's the word, crouching above the monthly inefficiency. Okay, even if the drawn liquidity is this monthly low, but we are eyeballing this inefficiency here. So as we continue to crouch above this inefficiency, if market returns into a premium, I think that should set the stage for a run lower into the previous monthly low first and the monthly fair value gap below sell side liquidity here. That's ultimately invalidating this bullish order block, because we've been bullish prior. Okay, we've been bullish, so we're still in high resistance type scenario. The market is finding it difficult to go through this discount level. So down to the daily time frame, okay, down to the daily chart, which is pretty important. Okay, on the daily chart, what do we see? Well, the weekly rejection block, and you can see the market has kind of like made a retest of it. And I recall this particular week I wanted to see the markets trade into the bodies of this candle. The commentary was about 10th of February. Okay, so I want to see the market trade to this. And you can see market obviously utilize the weekly rejection block, and that's why my expectation wasn't met that week. Okay, because I wanted to see the DXY trade to the bodies of this candle for a continuation into sell side here and here. And as soon as this candle closed, obviously I knew that this wasn't happening anymore, and I had to find continuation in this candle. Anyways, now we have a daily shift in market structure, market trade into this short-term high here. We have a shift in market structure, and we have a daily fair value gap. And mind you, I do not trade on Mondays. I will not trade today. Okay, I'll use today to observe price action. So today I'm going to use today to validate my buys, and my buys item from order flow bearish, but my weekly bias is bullish. I think the markets are going to draw into a premium running above buy side liquidity here. That's what I'm thinking. So today is going to give me something that is going to validate my bias, and I'm going to go in on Tuesday with that validation, and I'm going to trade in line with my bias. Now, if today doesn't validate, well, I'm just going to sit out Tuesday London session to see how the market plays out. If I'll need to readjust because my native confirmation is bias on dollar index. So I'm only interpreting bullish based on what I'm seeing on candlesticks. Okay, I'm saying they are likely to draw into a premium first before a continuation, right? And I'm going to watch out to see. Mind you, it's the first week of March. I don't need to push it too much because it's the start of the new month, right? There's non-vampire on Friday, so there's still a lot of confirmation that can come out from this week, and then we can now, based off of this week's close, we can now validate strongly what the market is going to do for the rest of March. But for the beginning of March, it's looking bullish to me on the weekly chart. And when markets get to that premium, and then we can now begin to anticipate continuation lower on dollar index. I think I've said a lot on DXY. I'll just quickly run through Euro USD. Euro USD has been in consolidation, okay, and basically, if you compare it to Euro pound, you see Euro pound has been very bearish. Okay, Euro pound has been bearish. So that's showing you weakness on the euro, because if you compare Euro USD to GBP USD, you can see even last month GBP USD still had a sort of bullish candle close, still showing you strength in the pound relative to euro. And it's one of the things we'll still talk about, cross-currency relationships. Okay, and you can see we're in consolidation here. And last month we have an indecisive candle, failed to run above this high or this low, stayed within the range. And we're talking about a potentially bullish DXY the first week of March. Although we are bearish, but we need the weekly time frame to validate that bias first, okay, to validate the monthly bias. So what's the weekly chart showing? The weekly chart is showing potential bullish on DXY. So I think this might be the draw on liquidity on Euro USD. Markets could potentially reach for this low first, and then we can now position ourselves for more buy side. Okay, why do I think they'll get here? Well, indecisive candle, and we're already looking at the possibility that DXY is bullish in the early portion of March, right? So if we transpose that idea to Euro USD, looking at the fact that Euro USD is indecisive, well, the market could potentially reach for the previous monthly low, and that could set the stage for higher prices on the euro, okay, in the month of March. But first off, we're going to look at the weekly chart. Let's see if there's anything on the weekly time frame. Well, the only thing I see on the weekly chart is, we can see this rejection block here, and this rejection block, we're going to split it into two. We're going to look at the consequent encroachment of the rejection block. That's 26.91. Okay, we're looking at 26.91, 26.91. Okay, that's the midpoint of the rejection block. I'm going to take out the low here because I'm trying to manage my expectation here. There's the rejection block here. We're expecting DXY to trade higher, and last week we had a very strong bearish close on euro. Now I can't have a bearish close on the weekly time frame, seeing the rejection block here, and expect this week to suddenly be bullish. I would need this candle to close first to validate bullish bias. So you can see here we had an indecisive candle too, and you can see markets returning back. Okay, this is what I'm talking about. Mind you, when that objective was met, I called on my Twitter account that I'm gonna remain on the sidelines. Okay, all right, so just wanted to stay away from charts. I didn't want to execute, just conserve my energy so that I can look at the markets decently during the weekend. So we have the rejection block here. That's the consequent encroachment of the rejection block, and this is the bodies of the candle. These bodies of the candle here. So we have our dealing range set, and my expectation will be for prices to return here, could potentially reach for the 50%, and of course trade into sell side here. That's the previous monthly low, but I'm going to stay within the range of this reason. Okay, so I'm very careful and nimble. Markets are in consolidation, and until we get back into one-sided markets, okay, because we are not yet one-sided. We really are not yet one-sided, back and forth. So I have to be very careful. So I think the draw on liquidity would be, the bodies of this candle, the rejection block, just like the way we're looking at it in the dollar index. All right, and the daily time frame. Okay, so on the daily chart, markets obviously have traded into a daily fair value gap, and the early portion of the overnight trading, that's the Asian session, has been bullish. So of course, I'm gonna sit Monday out, okay, because the high of the week forms between Monday and Wednesday. So if I'm going to be doing short-term trading, well, Monday isn't ideal. Okay, Tuesday, sometimes Wednesday during consolidation. Okay, and I just want to see how Monday trades, and that will determine how I'm going to engage on Tuesday. Probably I'm trading above Monday's high or within the range, Monday's range, because this candle could maybe reject, right? So I'm going to look forward to that. But first off, we have a daily time frame market structure shift. This is a market structure shift. Okay, this is a daily time frame market structure shift, and we have a fair value gap, and I'm talking about the drop being the rejection block on the weekly time frame. Okay, let's see if this serves as a precursor for markets to return into the rejection block. Mind you, we have an old fair value gap, and market has been literally consolidating on it. So markets return back into this old gap, into this daily fair value gap. So I want to see how Monday trades, and I'm going to utilize Monday's trading as data to validate my buys, and we're going to have a good chart on Twitter, how depending on how price action unfolds. And to remind you again, 30 likes minimum pays for the start of the new mentorship series, and share this video with friends, community. Let's get to 1,000 subscribers, and I'll see you in the next one.